All right, sounds good. Camera's good. All right, good morning, everybody. So, welcome to the open house today. I know it's the second one this week. The other day on Tuesday, I had some issues. I couldn't make it, so they decided to do a second day, which I think is a good thing. So the goal of the open house is for you guys to get a look at what we do, how we do it. It's not for you to try to piggyback trades and come in here and try to make some money. If you don't know what we're doing, you don't understand the trade, I suggest you don't try to copy it because this is not slow trading. This is day trading. Trades can last anywhere from 30 seconds to 30 minutes. So it may be a trade we're in and out of before you even realize we did it. And it might be a trade we hold for a half hour. I'm going to use terminology and language that my traders are familiar with because I don't want to take away from them because we're having an open house. So as guests, you're kind of getting a sneak peek. You get a look behind the curtain, but it's not really dedicated to you. It's not a day off from our regular trading. All right. So if the trades are a little fast, you don't understand them at the time they're happening, that's fine. Just hold your questions till the end. I will make sure to do a full review and go over all the trades that we're doing and clarify some of the terminologies you may not be familiar with. Okay, so it's more a look at, hey, if I was in here every day going over trades like this on a daily basis, how much better would I be in a month, in 6 months, in a year, that kind of thing. Right, it's for you to decide whether or not you think this is something that would help you with your progression and your trading journey. All right. So if I don't answer questions right away, I will do a Q&A at the end. I will do a program review at the end and make sure everybody is answered as best I can. But I'm not going to stop in the middle of a trade to try to answer something. So I don't want you to think I'm ignoring you or that I'm being rude, but we're going to go about business as usual. Okay. All right. So our market here yesterday, slow grind. Right. We had this morning range. We had our measured move above and below. Then we just had a slow drift up. Never really broke out above the highs with any significance, and then we came right back down. So it was kind of an inside sideways day, kind of what we expected, what we talked about in the coaching room. Now today we're gapped up in the middle of it, right? So here's your pivot high in the afternoon. Here's your closing low, and you gap right into the middle. You look at it on a 15-minute chart. It's nothing significant, okay? And if you go back to the prior gap up, this is where it consolidated at this higher level. So this day was a pretty big push on Monday or Tuesday. What day was this? Monday, Tuesday. We had that big consolidation in the afternoon, right? And that's where we are. You look at the current price ribbon, you're still right inside of that. So really we have to take out the peak of this consolidation. So once we can get over that 383 and a quarter mark, there's a chance, right? So you're telling me there's a chance. Maybe it's a little higher. 383, I'm sorry, 383 and three quarters. Get over 383.75 and we clear this little shelf, which tried to break out of this range, right? Yesterday we had, see how close it was? Like here's the prior shelf and it was trying to sit right on top of it right here and it just fell off. Right, so it was poised for the afternoon move. See right there, 2:30 reversal time. It's just sitting above that prior consolidation, ready to go, and first bar in just collapses on itself. And then everybody just kind of gives up, right? So on a 5 minute, you see it right here. There's 235. You see that little peekaboo high? Just tried to go. It was sitting above the prior consolidation from the couple days back, and then it just couldn't do it. So that's why 2:30 is kind of our second open, right? Our morning open 9:30 to 11, our afternoon if you play it 2:30 to 4. So if you look at this as the second open of the day, tries a quick breakout and then fails, and everybody just gives up. Guys, Microsoft 5-minute 200 whole number play here. That's not bad. Okay, first trade of the day. Look for a little counter bounce off of that. If we get trapped underneath the 200, we can look for follow through to the downside, but initially we can look for the support to hold and play for the little scalp bounce. Apple on a gap up. Yeah, market didn't really clear the high, so Apple gaps up, does not really hold much here. I don't think I would chase this one. Maybe you get a buy set up off the pivot, look for it to pull down here, maybe 50% retracement of the gap, look for a little bounce. If you're going to try to short it on the GBI, You want to look at risk reward. You probably have a 50-cent stop, right? Whole number stop here, break below the GBI, look for follow through. A lot of it will depend, I think, on the market. If the market stays sideways, the gap probably holds and maybe get whipped around a little bit. JPM, let's see, JP Morgan, nice igniting bar, JP, follow through. Yeah, I think we get it. So 2-minute bar, there's a great give back play. 5-minute bar is probably going to close right here near the high and you're going to get the same effect. Give back, breaking the whole number. I think that's a follow through. That's a good call right there. I like that one. Yeah, if you don't know, guys, like I said, you don't know some of these terms, give back or whole number play, things like that. I'll go over that later, but these are at the open, things move fast and sometimes you got to make decisions pretty quick. Facebook. See if Facebook can give us a GBI right here, trap under the 200. You can look for follow through to the downside. Microsoft bounce is going to come in play, I think. Now, again, if we get trapped, right, we can look for the initial bounce. If we get stuck under this and we take out that low and the market breaks the low, we can look for the follow through to the downside, shoot for 240. And if we get through that, you got some nice pivots just underneath it. It would be nice fat targets. Okay, so no follow through here, right? This was a potential trap short. We didn't get it. So nothing to do there yet. JP Morgan, we're going to get that little ribby play, that little narrow bar, give back on the 5. Looks like it's setting up for us nicely. So keep an eye on that one to trigger. Apple, if it comes all the way down, we said you can do the GBI short, right? So there it triggered. I would put the break even in now. If you get to 135, didn't quite hit it. Yeah, if it bounces off of this, I would just kill the shorts. It didn't get through the whole number quick enough. If it bounces off of that, you got to cover that short at break even or better. Okay. Gene, if you're getting a hotkey error message, then something is to be reprogrammed in the hotkey setting. You probably have either the account isn't listed properly or you don't have it set to default in the local order entry, or it's something simple. If you go to support, they can fix it for you. If it gets to the 200, I think Apple is a bounce off the 200. If we get it to flush out here, right, here's your whole number. So your GBI, you might have survived that. You might have got taken out break even. Let's see what the number is. If you got taken out, don't reshort, let it go. And if it flushes quickly down here into the MAs, you get support, we play the bounce. Okay. All right, Microsoft guys, go break even off the 200. Okay, we said we got trapped, we could short. If not, we play the bounce. So it gave us the bounce. It's 50 cents. We're growing strong here, 60. It's a good bounce off the 200. So there's some scalp target to be had right there. Very nice play. See if you can get the prior day's close. It would be fantastic. But for now, book some profit, put the break even in. eBay. Yeah, let's see if that gets back to prior day's close. That'd be target 2 right underneath the MAs. Yeah, it's a big gap out of nowhere. These are tough ones, guys. Gaps like this, it's not a novice gap because you were sideways, right? That's not a runaway move that just gaps up and you short it thinking it's going to collapse. Um, I don't really like playing gaps like this, to be honest, not my specialty. If you were going to try it and you wanted to short this right here, that's fine. You do a short, I wouldn't expect it to gap fill. I don't think it's going to do that. It looks like an earnings play, and I did not check this morning, so you could briefly check that. If it's an earnings play, you may not get as much retracement as you think, right? If that's a gap off of earnings, you might get a little bit of retracement and then start going sideways. They're notorious for doing that on earnings plays. They gap up, think it's coming in, you short, and it just kind of dies out. So, if you were going to try short, I'd look for like a 1/3 retracement as a target. Make sure your risk reward can be justified with just that little bit of retracement. And if it can, you try it. If not, I would skip it. Cisco, beautiful. Yes, the 5-minute give back bar. There it is. It ignites, it pulls back. You play the break of the high, stop onto the low. That's fantastic follow through. 2-minute bars up, 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 and up. Where can we get to on our daily? We're trying to break to new highs. Yeah, I'd probably go 46.50 trail and see if you can get this thing go through the next number. Get it through 47 and then look for it to pause and a little pullback. If we get far enough up, we could try to fade it, but right now it's too early in the move. If you could catch a 2-minute rib, you could even jump on board for a little bit more. Hey, Microsoft target 2 hit there underneath prior day's close in the MAs. So just a nice little bounce off the 200. Risk reward on that, guys. You see how tight that is? You have a stop under 241 and entry here, and then you get a rally to here. And it may not look like much to you, but that's a big trade when that's your risk and that's your gain already. 2 targets out the door. Nicely done. Okay, trail it out. You can stay on break even if you want. You can tighten up to 242. I would not let it come all the way back down. I'd protect the last bit of profit there. I'd say 242 on the trail. Facebook poised for the GBI, guys. We'll see if we get it here. Trapped under the 200. Let's see if we can get that thing to go. Back through the whole number. It's not following through much. I'm going to kill it now. We'll take a half loss instead of waiting for it to stop out and then see if we re-enter under the low. It bounced up a little too much. So now we got a second entry under the low. Let's see if this one gets us more follow through. So first one kind of jerk us around and it's not giving, when you get these breaks of these GBIs like that, you want your follow through bars to be pretty clean. When they start jerking around like this, it's not a great sign that we have momentum, right? It's very whippy, very choppy. That's 2 in a row that's done that. Markets here sideways. You don't want a lot of whips and tails when you get those triggers, right? You just want a nice clean bar to close. And then if you don't see the follow through and you get the whip, you jump out. So Facebook here jerking us around a second time. If this doesn't close down on that 2-minute bar, we're gonna have to kill this one again and just say it's not ready. Right, we need this one to just close at the low of the bar. It's a nice clean follow through here. Not going. Should be going by now. Should be going. We need it to close down or I'm going to bail on it. Market sideways, it's not helping anything, right? You get a lot of chop. Market's just dead sideways. So a lot of these things are probably going to struggle to gain momentum. We come back over 266, I'm killing it. I'm just going to give it that chance. That's it. So we're starting to eke down here. If we snap back over 266, I'm out. We'll take another small loss. So it'll be 2 attempts. Didn't work. Losses will be controlled. They won't be full. I can live with that and just chalk it up to being a little choppy. It shouldn't take this long to get going. All right, so we're done messing around Facebook. Here's too whippy. So 2 scratches, no big deal. Well, small losses, I should say. Scratches when you get closer to break even. Take little half losses, not the end of the world. Apple, yeah, so if you can get down to that 200, I think you can play the bounce. So your GBI short, you're out. And if this is still coming down, I would play long off support here, try to get it down to the 200. V, let's see, Visa igniting bar, a little give back, no follow through. Yeah, guys, market is just crappy this morning here. There's no momentum. No momentum on that. JP still poised. We haven't got our trigger yet. If we do break above that 5-minute high, we're going to get follow through. So the 2-minute play was solid. 5-minute, we haven't triggered, but still keep an eye on it. If that takes off, we'll be good. Let's go. Yeah, it didn't make it to 47, right? It said whole number we could try to fade. There's your narrow bar. There's your bar by bar break. So that's the end of that run. Now you look for a pullback and to the next buy setup. So we didn't get that chance to fade it. We didn't quite get high enough. Yeah, if you caught it again, guys, the give back play early, that was the play, right? There's that narrow bar effect. Huge rip. Nicely done. The Microsoft stopped out on the trail, so we had a quick hitter there, and then that trailed out. Can't seem to get anything else going here. But you got to be patient with these things, guys. If you don't, we don't have momentum yet. Market sideways. You don't want to overtrade and get chopped up. American Express. That's pretty good ribby right there. I like that one. Follow through is, yeah, it started. Probably going to get pulled back here and knocked out, break even. And we're just getting a whippy open. Now Facebook wants to go, guys, and this will happen to you sometimes, right? Like it was just too whippy in there, and I didn't. We see the follow through bar we're getting here, right? That's what you want that on your entry. But you see how whippy this was? It just couldn't stay in it, right? It just did not. It was too wild against me to run the risk of taking full stops, right? It did not do what I wanted it to do when I traded it, right? When I get a trigger, I want the follow through. I don't want to wait 10 minutes after the trigger. So I had to get out, and now we're starting to get a little bit of a push down. So the read was good. It was just too wild, and you're not going to be right every single time. But when you're not right the way you want to be, you do the right thing as a pro, just bail. It's not your trade, not meant to be. Now, if this thing falls off and gets down to these pivots where we wanted, We're just gonna have to play the reversal because now we're out of our entry. We're way late. It's not the time to jump in short. We're out of position, and we'll wait and see if it comes down to here. And if it does, we could probably get an entry off of that, and we'll play for a little counterplay. Right. So even when you make a good read, sometimes you just can't stay in the trade. It's good that you see that. Not the end of the world. See professionally what you do is you don't stay wrong. Okay. If it doesn't go when it's supposed to, remember the reason you got into the trade was you expected it to make the move when you got in. You didn't get into the trade to wait 20 minutes to see if it makes the move. Okay, we said market over this high point right here. We should get some follow through. Let's see if that can make JP jump a little bit. See if it gives Apple buy set up. Probably have to clear out this right here to get the follow through going on Apple. Right, that was the last attempt. I'd say we got to get over that high. If we could get a 5-minute ribby to form right there on the spies, that would be ideal. Igniting bar up, hold a narrow bar right here, and then break to the high. That would be great. Okay, so we didn't get the ribby. Not yet, right? A ribby is a small red bar that gets ignored, right? So you get an igniting bar up, you pause, you break the high. We didn't get it. No trigger there, no follow through here. Still have to wait it out. Intel, if it breaks out of this, yeah, if it can get out of there, what do the rest of the chips look like? AMD, sloppy, Micron. Yeah. I don't know if Intel's enough juice on its own. QCOM. If it can hold the tail, yeah, this looks like an earnings gap too. It's same problem with, same thing as like with eBay, right? See, there's a big gap. There's a small little move, and now it's not really doing much. And I think QCOM's kind of the same thing. It looks like an earnings gap. And it's, if you look at the 5-minute range, right, there's the opening 5-minute bar. You're still inside that. So it really hasn't gone anywhere from the gap, right? It had 5 minutes to open up, trade through its range, and now it's inside the 5-minute bar. So if you don't break the 5-minute low, chance for a little recovery, maybe go test the 5-minute high. If it stays pinned toward the lower portion, you need that MA, I think, to catch up to try to break it down. If you get a poke through that low and the bar does not close lower and it snaps right back up and then breaks over that bar's high, you're probably going to get a little recovery, right? It'll be, that tail will hold. So if it pokes through and closes back above, don't short, and you can look for a little bounce at that time. If it can get over this bar's high, let's see, yeah, if you can get back over this bar's high, you got a chance for a buck or two to the upside, right? Just to retest the 5-minute high. I think that play would be fine on QCOM. Right, it'll get you above your little 2-minute 8. See the last time it tried right there? Tried hard rejection. So if you just clear that out, it probably has a little bit of a recovery. Right, but on those big gaps, guys, especially earnings plays, not uncommon that first half hour that you don't get much. There's one opening frenzy and then you get stuck inside the 5-minute range. So just be patient with it, right? It can make a move 10, 30, 11. I mean, I don't think it'll go dead like this all day, but sometimes you got to be a little patient on that. Don't be in a hurry. Plenty of room if it's going to work. See, even this is choppy as can, it's still, guys, trying to work its way down. See how whippy? So even if we're in that next short, we wouldn't have been able to stay in it. Just need to wait for this thing to gain some real traction, flush itself out, and see if we can get a reversal down there. I don't think I can find a way in to control that risk properly on the short. It's too wild. Apple not doing much. JP waiting. Just got to break out of that high. PayPal, another earnings gap. And now that's not bad here. Here's your 5 minute. See how this one broke out of its 5 minute range? So there's the gap, right? It ignites, and then here's your inside bar, inside the 5 minutes, and then it breaks immediately over the 5 minute range. And you got a little bit of follow through, right? Now, if you pull back to your 5 minute high, you're out at break even. There's not, it's not maintaining it. But that was enough of a little pop there. You probably could have booked some profit, been a decent little pop. And if it holds this and then takes out that high, maybe you get one more leg up. But if it comes right back down to where your entry point was, you just got to let it go. All right. Versus QCOM, which its 5 minute bar held, and then it didn't break the high, it didn't break the low. It just kind of sat there. Now we're getting ready to make a little bit of a push if it can break over that little 2 minute pivot right there. If it can clear out that little shelf, should be able to make a little bit of a run, but make sure it triggers. Guild, let's see what you got on the Guild. All right, it's into the 5 minute 200 already. So I would not buy it into the 200. I'd want to be on the other side and then pull back into the 200, retest and hold it. All right, go through, get yourself a pause or a ribby or something because you're already on the fifth bar up trying to break through the resistance. Tough to be the one that's chasing it that late. Okay, eBay down to the 8. So here we're getting near our 1/3 retracement. If we get to 62, I think I would take some profit on the short, and you can look for a little buy off 62, right? Little 1/3 retracement. Okay, if it doesn't hold that, then don't buy it, right? Don't just buy 62. Make it come down, hit it, start to bounce off it. And it's going slow enough, you probably can do closed bar. I don't even think you need to chase it, right? You don't need to bid it. You can just wait for it to reverse. Okay, let's see if our JP can grab some traction here. We were patient with it, set up nicely, igniting bar, consolidate upper third. Here's our break. See if we can get a little bit of a rally going off of that. That'll be good. There we go, boys and girls. There we go. There we go. All right, break even in, free trade. All right, that's the beauty of it. Break even, free trade. What I mean by that is once you have a break even stop, you can't lose. If you're going to make something, whether it's a little, a lot, or whatever, you're not going to lose. You've eliminated risk. That's the goal, right? If you can get every trade to risk free as fast as possible, you have nothing but upside. That's the name of the game. Control the downside. Okay, don't worry about the winners; they'll happen. Control the downside. Winners take care of themselves. Go JP. All right, if we can get to 138, that'll be a fantastic move. Anything above that would be gravy. All right, what else we got? What else? What else? Starbucks, that's not doing much. See, Microsoft got all jammed up in here. So we had one good play right off the open, right? And then we cut it loose and it's done nothing since. Facebook has proceeded to continually whip itself around, and we're not going to go back and chase that. Here comes your eBay down towards 62, guys. So good target for the short. Your retracement level. See if you get a closed bar play off 62 for a little bit of a buy setup. Maybe play the 2 minute buy here at 62. On the JP trade, you're on the JP trade, JP Morgan trade. Yeah, we're on the JP Morgan trade, all right. Market's trying to help us here, right? Market trying to trigger the ribby. That should help. Financials in the market in sync is always a powerful combination. Take us to the house. Take us to the touchdown. Now, if we're fortunate enough that we do not pull back to our entry, right? Because if you pull back to the entry, you'd have to get out and then look for a new trade. If we get a high or low pullback or a pause or a ribby or something after our first target, we can always look to add back to that trade, play the continuation. I'd like to have the 8MA get past our entry as well, right? Because there's a good chance that we're going to get a retest. Okay, so we made it up to 90, pretty good push. If it pulls all the way back to entry, unfortunately, it's break even time. We're out. If we get a little higher low on the 2 or something, we can add back through 138. I'd like to see this 5 and an 8 just catch up here before. Right? I want the 8 to come to price. I don't want the price to come to the 8. That'll bode well for our sustained follow through here. Yeah, but if you look at the 2, that's a good little run. So it's probably going to pause. We're going to get a little pullback. We just don't want to pull back all the way down to our entry point. Right? It's basically would erase the whole move. Can't hold through that. Yeah, market's trying here. This is getting Christmas tree lights here. Red, green, red, green, red, green. We can't seem to get a consistent push. That 2 minute starting to form, right? So this is the pullback that we're expecting. Okay, this is not uncommon. It's not out of the ordinary. We're expecting this. What we don't know is it going to come all the way back down? And if it does, we got to take the back half of that trade off. If it doesn't, we can always look to do a little add back here or play it as a ribby through the whole number. That would be ideal too. You want to do Starbucks short? Let's see, Starbucks short. Yeah, okay, you're going off the pivot and the whole number. It's kind of a sideways 20. If you want to try the narrow bar. It looks really, the price action doesn't look really smooth, kind of jerky around a little bit. Looks a little choppy to me. If you wanted to try that 2 minute sell right there, it's a small risk reward. Get a pullback for 30 cents on a 10-cent stop. That's fine. All right, here's our target, guys. Closing up on JP. You hit 97. There's your high print right there, 96. I would not lose target over this. So if you're looking for a whole number and you're at mid 90s, get some profit booked. You can always add back. Okay, don't look a gift horse in the mouth. A couple of ticks away from the whole number, good enough. Book some out. You can always play the add back. Right? But you don't get this close and then over 3 cents miss a target. There it is. Whole number hit anyway. So beautiful. Now, if all that size that's coming in on the offer can clear out, we should spike through this. Okay. We should get some decent follow through because a lot of order flow came in, right? And we kind of went through it pretty good. We should get a nice little follow through. If we don't, then we're probably getting pullback, right? Because if that much order flow gets chewed through and then there's nobody else left to push, like everybody bought the offers and then that's it, not a good sign for us. It should spike through it pretty good. So I'd say this 2 minute bar by bar now, the low of that bar is 91. That's a good place to bring up the entire trail. And that's pretty good push through. There we go. That's what I want to see. Let's see if we can get another quarter out of it. All it takes is one good trade, boys and girls. We've had two good trades, right? Microsoft and JP. We've had two really good trades. And then Facebook kind of scrapped around a little bit. So trail stop there for me. You can do what you want with it, but I would lock that in. eBay, let's see what's up with eBay. All right, so there's your closed bar on eBay. Right, we said near 62, look for a closed bar. So if we can get back over that, you could try a buy. Or the next bar, if the next bar gets smaller yet. If the 2 minute 8 pinches that thing and it cracks the low, could you get another late? Yeah, I mean, we could get 60. Usually they don't fill that far, so I'd be a little hesitant on that secondary short. Um, if it goes to trigger and the A comes down and then you pop back above it, that'll be the trigger for your buy, and your target's going to be basically 63, where this last little shelf is. So you're looking for like a $1 move right there. Anything past that would be extra. Okay, you see it on the 5 where it kind of paused and then broke down. So that's going to be resistance on the way back up. So if you can get a nice little narrow play in here somewhere and look for a move back towards 63, make sure the risk reward is justified, right? You don't want to take a big stop only to get 63 because you can't bank on getting through that. Okay, and if the short does trigger, it follows through, probably coming all the way down towards 60. And then the same play, cover short and then look for the long on the whole number at 60. LVS, possible GBI setting up. Yeah, 5 minute bar. Kind of a sideways price action. We don't really have momentum yet. So is that the breakdown bar? It'd be great if it gives you the GBI. If you want to short under that low, use the stop right there over that high. A little give back. Try short. You have daily 20 trying to help hold that thing down. Yeah, market's going higher. It's going to be hard for things, I think, to break down much if the market's leaking higher. Facebook, is it gonna, it still looks whippy. I still, we said a whole number in this pivot area would be good support, but that still doesn't look good to me. Much as I want a second, third crack at that thing, I can't do it until we have a good look. Apple, remember this play here, guys, off the support. There's your bounce, good play. Okay, so you had to be patient. You had to let it get down here to support. Well, once it did, hits the 20 and the 200, comes right back up. That's a good play. Would expect follow through off of this. Right. So when you're anticipating where things should go, like back here, we're talking about, okay, Apple has to get down to the support area. And then it takes a while, right? 5, 10, 15, 20 minutes. You got to wait. You got to be patient. And there it is. Boom. There's the drop. Look at the 2 minute overlapping with the 5. Little 2 minute buy setup in line with a 5 minute support, in line with 15 minute support, in line with hourly support, in line with daily support. You had all kinds of support right there. Right? You just had to wait for it to get there to test it. But look at how everything is overlapping on every time frame. That's a great cover and a good stop and reverse area. Take your shot. Okay? Get enough of a bounce up here. Throw it a break even, and you get another free trade. Just keep giving yourself looks like that over and over and over. Right? Play strong areas where you should get some decent bounces to start or some decent drops to start. Get your follow through, throw in a break even, and just wait. It's either going to give you a nice profit or you lose nothing. Right? But if it's not doing that, you want to be out of there as quick as you can. You don't want to give it time to take your money. The longer you wait for something to gain momentum, the bigger chance you have of losing. That's why on Facebook I was out of there twice quick. It wasn't doing what it should have. Okay, so I would have break even in on this on Apple, right? This was your support area. That's a good enough push. That eight's hooked. You don't want to get trapped, so that's enough range. Lock it in, free trade. See what kind of follow through we can get. And if we bust through that eight, should be able to get back up into here where it started. See, it was kind of sideways. Chop, 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 chop. So same thing. If we can get up through that, that would be where we could take off. Okay, market giving us the red, green, but drifting higher, right? And it got over that key benchmark from this morning that we talked about, that key pivot. So should help us. There we go, Apple. There we go. Come on, baby, get through the eight. All right, good enough for me for first target, right? Here's your support levels. Right into the 8 MA. It's a good push. Target one, take it. Leave the stop in at break even for now and see if we can fight this off and get a secondary move. You're trying to trade Boeing. Let's see. Yeah, it's a little whippy in there, isn't it? A little choppy. Yeah, you're probably gonna get a lot of break even stops on this. It's not giving you those nice clean bars that are stacking up on each other. So it's going higher, but it's a tough one to trade. Price action on that's not great. eBay down toward the whole number at 61. I think it's worth a shot. If we get a whole number at 61, and outlook, guys, I have nice trades going. I'm good money on the day, so I can be more aggressive. So I think taking a shot at eBay at 61 is worth it. All right, it's just shy of that 20 for a full 2/3 retracement. It's a whole number trade. I think it's worth doing. Okay, now I'm doing it early because I have profit on the day. I can be a little more aggressive. And if it didn't work out, that's okay. I'm not putting myself in a hole because I was overly aggressive. Okay, it's a whole number trade. See it right there at 61. If you don't know what that is, I'll go over it later. But basically, it's a way to play something before the bar closes. Okay, so you get near an area, think you're going to have some support, you take a shot before the bar is closed. Right, it's a way to do it early. So we're not waiting for confirmation. Well, the confirmation is the breach of the whole number and the immediate snapback, but we're not getting a close bar confirmation. The other side of that trade is you have to be super disciplined with getting out quick, right? So if we trade it off 61 and it goes up here 20, 25 cents and stops and comes back down under 61, trade's over. Just like that, right? It's that aggressive in and it's that aggressive out. So it's already at a point where it'll be a scratch if it comes back to 61. So that's what I mean by some of these trades are super fast, and if you don't know how to do them and you're out of sync with the entry, you might end up taking a loss where we take a scratch. But if that ends up holding for 61, we're going to have a really good entry right near a bottom for a bounce. If it doesn't, then it probably will make it down to that 20, and that's a little easier play for you off of 60. Okay, so now you even have a closed bar. So if it violates that 61 low, you're definitely out. A little late for me to want to short to try to get it to 60. Some people are going to look at that as a possible GBI. It's a little late in the game here. And we might have a chance to come off of this anyway here. If we fight off the 2-minute 8, probably rally back up and decent little move here on eBay. All right, so break even in, if that thing falls through 61, dump it like so. So dump it. All right, Apple trying to fight off the 8, doing its best. Let's lock in some profit here on the back. So let's go. That bar is going to close right now. So we can at least go to the 5-minute bars low. Okay. We can at least lock that in right there. So come up off the support area. You want to cheat it up a little bit. I suppose you could go to like maybe 20 cents. Go 135.20. Lock that down. See if we can keep going. Now remember, expect that we're going to get a little bit of, resistance in here. This was kind of chopping around with these tails on the way down. Then it broke. So on the way back up, it's probably going to be the same thing. It's probably going to take a lot of button around there to get through it. If we get over 60, there's a chance we're just going to start churning right to 136. And that would be ideal. So if we get a ribby right here, little pause that does not stop us out, and we break 135.60. Do a little add, markets rallying here. That's a nice thing. That should help us. Gil got above the 200. Yeah, I said before I didn't want to try to buy through the 200. You got above it. Now you're starting to consolidate above it. You do have Haas right here to worry about. I don't know how much room you have left. Something a little more wide open. Okay, guys, eBay second attempt through whole number. So we had to dump the first one. We didn't make a new low. Got a second attempt. See how we do on this one. Looking a little better this time. We just got to get off that 2-minute 8, and the thing is holding like a rock here. If we just pop through it, we should be able to scoot right up here pretty good. 2-minute 8 holding it like a 5-minute 8. Usually won't be that hard to break through in a reversal. But we got to play what we see, not what we hope, right? We want it to go higher, but if it doesn't, we got to get out of the way. And if we fire off that 2-minute 8, it should trigger us on a 5-minute closed bar as well. It should give us a chance to run up toward this hooked 8. Market doing good on the grind here, right? It's not ripping away from us. It's just a slow grind dive. So bullish things. Look, short's probably going to have to cover if you're not already. It wouldn't look to be shorting things right now as the market's eking higher. There we go. Come on, eBay, second attempt. Let's do it. Let's do it. Let's do it. There we go. It was a good push. See if we can get a buck. Right, if we can get $1 before we hit that 8 MA, that would be solid. Micron Ribby. Okay. Remember, break even on this one, guys. This comes back down here. Just don't mess around with it. It'd be a lack of follow through. Not worth it. We'll just dump it. And again, not everything is going to work. But when it doesn't, the key is recognizing quickly, right? The goal is how fast can you recognize it's not working versus just getting out early at any little wiggle, right? And that's the key. Once you can figure out what momentum should look like, what follow through should look like, how to play that, when you don't get it, come on, Apple, fight your way through here. This could be a nice big one. I think this can be an add point here if we get over this shelf. We can add and take Apple higher on a 15-minute buy. But that's the key. You know, when your trade's not working versus let me just hope it starts to work, right? You have to be honest with yourself. You bought it or you sold it for a reason, and if the reason is not materializing relatively soon, why are you still in the trade? Right? And the fear is, well, what if it moves after I'm out? Well, so what if it does? Then you were early on your entry, right? It's supposed to move when you enter. You're supposed to be entering because it's supposed to move. You're not getting in the trade to wait a half hour. All right, if this is our ribby right here, guys, we're going to do the add. Okay, so this the area we said would be resistance. So this is not surprising. So it should happen. Okay, remember before, old support, all these tails trying to hold, try to hold, try to hold, try to hold, break down. Boom. So now on the way back up, what happens? All these support tails become resistance on the way back through. So this should do this. I actually don't mind that it's doing it. It gives me a chance to add back. So if we can get the ribby to hold and then break through on the high, more upside, right? Look at it's a 15-minute bottoming tail trying to trigger a buy setup. We love it. We love it. Is this available daily or is this a special session? Well, it's available daily to the members. Yeah, this is what I do every day with the program people. So if you're here on an open house event, then yeah, this is what we do. And I do it every day. But if you're not in the program, no, you can't just show up in the chat room every day. And is it special? It's special every day. There's education. Every day you will see stuff that will make you a better trader. Oh, Applicious, how do we love thee? Let us count the profitable ways. Let's go 5-minute bar by bar. Let's lock this in. And if we get stopped out on a ribby, we can play it as a new trade. I want to keep this profit booked. Market's just kind of just grindy, right? We just can't get a nice run here, nice clean run. And now we're getting a little consolidation again. So maybe we'll get lucky and we'll get one more pop here. Right, it's a very slow, choppy move to the upside. We're not getting like rip roaring momentum here. So you don't want to fight this. I don't want to try to fight that market. It's just hard to time it to get in. So stay with what we got. There we go. Apple, come on, break through, baby. Break through, baby. Break through, baby. 136 is next. Here we go. The chat room for members, yes, we start every day at 9:30. There's usually a small break at lunch, and then there's the afternoon session. There's no pre-market trading. There's no post-market trading. All right, so we got our bar by bar trail in, boys and girls. We'll lock that down. Right, market had a little narrow bar, broke. Probably going to pull back. Book profits. We'll look the gift horse in the mouth. Not a trend day right now. It's just kind of grinding higher, right? But this is not an all-out momentum trend where I want to just sit through all the pullbacks. Book the money. We can always replay it. All right, so it is what it is. We're back to flat. Pretty good morning, right? One out. I'll look at eBay. Man, got jerked out of that thing 2 times. Happens, boys and girls. It happens, right? So it's kind of, in a way, it's frustrating. I don't like it, but it's good that you see it, right? You're not going to get everyone to work. So the read was correct. The support area was correct. But because of my theory about, listen, we need to protect ourselves as quick as we can, I did get bounced out of this play twice. And now it's third attempt is working. I'm not in this one, right? Facebook, same thing. The short worked, but I got bounced out of it twice. That's fine, right? You're not going to get every one. But what I'm avoiding are massive losses. So when those things do fail, I don't take big hits. And by doing it the same way, when they work, I get great follow through, right? So JPM worked great, right? JPM, terrific follow through. Microsoft, good follow through. Apple, good follow through. So those worked. eBay and Facebook, I couldn't stay in them using the same methodology. And that's what you have to understand. I'm going to do it the same way every time. And sometimes I'm going to get bounced out a little early, and that's okay. Sometimes I'll have a way to get back in. Yeah, QCOM. So remember we said wait this thing out. So there's a lot of sideways in there. What time is that? 10 o'clock. Remember I told you sometimes, guys, that first 30 minutes, you won't get much. So there's your opening frenzy. And then for a half hour, you didn't get anything. It just stayed right there. And then finally, after 10 o'clock, you get a little breakdown. I would not touch this one until it was past the 8 MA or it's separated. So yeah, it's at a whole number, but that 8 is just kind of riding this down. Look at that 2-minute 8. That's just a pure distribution. I would not jump on this thing until it was back above that 8 MA. It's not stretched out. It's not far enough. It's not, you know, selling off at rapid pace. It's just slowly churning its way through. Market's putting in a red bar. I would not be in a hurry to jump on that. I'd want close bar and back above the 8. But anyway, just so you understand, guys, no matter how you do it, I don't care what your method is, you cannot get every single trade right. It's just impossible. Defies the odds. But what you can do is get out of trades quickly, right? You can protect your trade. So if I have a small loss or a scratch, the trade didn't work, but I didn't dig a big hole either. So when you hold through all your losing trades to the full extent, that's when it's hard to overcome the losses. Now, sometimes the trade will fail on you instantly. You'll take it, and I mean, like, you just feel like you're cursed, right? I hit the buy button and the bottom drops out. Okay, you're going to eat that one in total. There's nothing you can do about it. But that should not happen often. And if it does, you're doing something, two things. If that happens often, you're actually reading the chart really well, just in reverse. Okay, now think about this. If you somehow truly had the ability, like I hear this from traders all the time, and most of the time they're just exaggerating. It's not always, but they feel that way. So they will say something like, man, every time I buy, it goes lower. And every time I short, it goes higher. And what usually happens is it starts to go their way and then fails. Okay. And that's the area where they should have been getting out at break even. Instead, they let it fail all the way through. Now, if you truly could have the ability, like, listen, man, I hit the buy button and within 30 seconds it's going the other way. Or I short it and within 30 seconds it's going the other way. And I'm doing that 80% of the time or better. Then you're trading really well, just on the wrong side, right? That means you're picking the move, you're picking the moment when you should be making the entry. You're just reading the trade backwards. Because if you can consistently get it wrong, that means you're spotting the momentum changes or the time to be entering. You're just seeing it backwards, right? You're consistently wrong. That's the same thing as consistently right, just on the opposite side of the trade. So it's not a bad thing if you're always having trades immediately go against you, but it's usually not the case, right? When I look at traders' records a little more deep or talk to them, it's not really all the time. They're just remembering, like, yeah, well, it was only like 3 times that happened last week, but it felt like every time. The rest of the trades started in their direction, gave them opportunity to get to break even, and they didn't take it. So it feels like all the time. But if you're in that rare instance where it was all the time, you just need to figure out what you're doing to see it backwards. You just need to figure out why you can't read the chart the right way. And once you can undo that, you should be good. So do the opposite. Yeah, I mean, that's one way to fix it. Do the opposite. Ideally, I would want to figure out why I was seeing it backwards, because what will happen is you'll start second guessing your opposite, right? You'll start doing the opposite and say, well, what if this is the time it's really the right way? And then if it doesn't work on the opposite, you'll think, well, I should go back to what I was doing. So you really just want to figure out, well, why am I constantly seeing it backwards? What is it that I'm doing wrong here? And let's fix it.
Can I get you a pain reliever or
All right, let's see.
something?
It's 10:30, guys. So the market, we said this was kind of a slow
A
drifting,
gun?
grinding
Oh,
trend. There's a
jeez.
narrow bar. There's the break.
Okay, I can work on that.
Not convinced we're going to get a buy
Okay.
setup that makes new
Aware of
highs and
that.
we trend today. I don't. This doesn't feel like that kind of day. So first hour was pretty good. We found a lot of trade. Here we go, guys. Here's QCOM on the reversal. Said we want to get back above that 8 MA. Now, if it hits the 5, so you break above it on the 2, right? Now, if it hits it on the 5, there's a good reversal bar. If it hits this and stops and comes back, no good. If this follows through, takes this out, and the 15-minute triggers, you're probably going to get a move, maybe go test 148, where that last shelf was, right here. Bill's anxious to speak. He wants to talk to you guys. He'll get his chance. Don't you worry. Get Uncle Bill on there in no time for you. All right. It's 10:30. Like I said, I don't know. Like if QCon gets over that 5-minute 8, maybe we'll get a little bit of a move. Market itself, kind of, Yeah, I think we might have our solid hour of power here. Let me do this. Just take a little trade break for a moment, and let's go over any questions. Then if the market kind of shakes up or QCon breaks out here over the 8, we can jump back on something. But so let me do that. Let me get up. Find my drawing clipboard here. And then do some questions here. All right, so I'm going to change over to the clipboard. All right. So any questions from the morning or any questions on whatever? And I can use use this here if I have to draw or take screenshots or explain concepts or whatever. And I guess I don't know if I can get to every single one, so go ahead and post them, and as they come in, I'll go through a little bit here, do the best I can to catch them all. Ribby's far away from the 20. It depends on the number of pivots, right? So here's the thing: a general market cycle concept, right? Markets move like this. Markets move in waves. Okay. If something is trending, you should on a 5-minute chart, you should get three good moves if the trend is going to be strong. Right. Most of the days you get 1 to 2 and that's it. Because most of the time, I'll tell you this, guys. Overall, the majority of things do not trend most of the time. So the whole idea the trend is your friend, that's true when it's trending. The problem is most things don't trend most of the time. So you have to know how to play the majority of the time when it's not going to give you an all day trend, right? Every once in a while it'll do that, and yeah, it's easy. But what about every other day when it doesn't do that? Okay. So on a market cycle trend, you'll get 1, 2, 3, and that's usually it. And then after that, either go sideways or it's very weak to the upside or it'll reverse. Okay. So when you're getting where you are in your trend cycle, if you have a strong move up like this, and then you pause right there, and this becomes the area for your ribby, right? And you're saying, well, I'm way away from the 20. Well, if that was the first 2 bars of the day, so what? So what? I mean, that's you want to play that, right? Now, if it's the third move here, and now I have a ribby here, and my 20's here, and I have all this distance from the yeah, I don't want to play that. Okay, so it depends on where you are in your market cycle. JP on the 2 minute. All right, let's see what JP looked like on the 2 minute. You did JP 2 minute at 940. Okay, that was actually a good little trade. Now again, this I'm going to take it with the 2 and the 5, and I'm going to show you why I'm a fan of this 5-minute chart so much. It'll prevent you from having some of these issues. All right, so you did the trade 940. And then your next, you asked me what the next one would have been, which is right about here. It's good ribby. All right, so you probably got bounced out right about there. All right, so here's your entry at 940. And on the 5-minute chart, that was right about in here somewhere. All right, so here's the 940 2-minute bar entry. This is what it looked like on the 5. Okay, so what I was doing and suggesting we do is we saw a solid 5-minute bar. Now, if you already played early, right? If you played 932 on the give back, then you're fine. You're still in this. You could be sitting through this pullback with a break even stop. If you didn't play the give back and you're playing the first buy setup, here's the 5-minute chart, right? Strong igniting bar then holds the ribby in the upper third. So my idea was we're going to play when this ribby breaks. When we break the high of this, we're good. Until that, we could whip around and we could be sideways. So on your 2-minute buy, that's a trigger. That's fine. And right about here, you're probably saying, okay, I should go break even. And then right about there, you got knocked out at break even. Now, if you didn't do the next 2-minute buy right away, then you're not back in the trade. And you're saying you didn't get back in. So if you're waiting from here, I would say that's the same as the 5-minute ribby, right? You see this prior high right there. You're kind of going sideways. You look at the 5-minute chart after you got stopped out, right? Let's see, 2, 4, 6, 8, 40. So it's like 50. So now we're like this, right? We're starting to form this kind of action on the 5-minute chart. So you can see it forming, right? It's holding the upper third of this move really well. So we need to get above this upper third. Otherwise, we're just going to keep chopping back and forth in here and you could keep getting whipped around. Right? So on the 5-minute, it was pretty easy to see the trigger, right? As soon as this bar broke over the high, whoops. As soon as this bar broke over the high like that, that's the trigger right there. As it's going over in there, stop under the low, good to go. So on your 2-minute, what would that have looked like? There's a ribby, but it's not clear of the high. See? So that ribby's not clearing the pivot high yet. So yes, it's a ribby, but no, I wouldn't have done the entry because you run the same risk of it hitting this and pulling back. That's the bar that breaks the high. So that would be the entry point you'd want. The confirmation of the break because the ribby's so close to the high. So as this one is taking it out, so it's confirming that, right? It's so close to the prior high, it's not worth jumping in early because the move you're expecting is big follow through, right? So giving up that little bit shouldn't make a difference. If you risk $1, okay, if you risk $1, if your risk is $1, all right, and you're 1 cent above your entry price, so you're saying you triggered, right? So you're risking something and you get a trigger. Okay, so now you're in the trade, and you're asking when do I go to break even? Depending on, I got to see the chart. To be honest with you, the general rule is when you reach a 1-to-1 target. Okay, so you have a $1 stop, you're looking for at least a $1 target. However, I need to know, is there a spread involved, right? Are you playing something with a 10-cent spread, a 20-cent spread, a 1-cent spread? Because $1 is a long way to go. Now, is it taking it out in 20-cent chunks because of a spread? Then it's not that hard to clear your dollar. Is it moving penny for penny? Okay, if it's moving penny for penny, then I'm probably not waiting for the full dollar because that's a lot of movement 1 cent at a time. I'd probably cheat it up after, say, 35 to 50 cents, right? Like a 1/3 move, I'd say, okay, good enough. Boeing, that's just a tough stock. Today was a tough stock on Boeing. So, and that one, that one trades okay. It just today was tough price action. So if you had 50 cents or more on that one earlier today, just the way the price action looked, I probably would have said that's enough. But it's just a whippy stock today. It wasn't an easy one to trade. So if it got you, it got you. If you enter a trade, Carl's asking, if you enter a trade and it reverses immediately, there's not much you can do about it. Right? If you enter a trade and it instantly reverses against you, a lot of times you just have to eat that one because you never gave it a chance to see if it was going to go. And if it reverses and goes against you as like a little bit of a retest and then takes off, you don't want to be out of that one, right? So it's only once it starts in your direction and then starts failing back towards you, that's when you have time to get out. If you take the entry and it just starts to fail, really not much you can do. Right? I mean, you could try to jump out, but a lot of times those are just going to be little retests and you're going to miss some winners because you might be 10 seconds early, you might be 20 seconds early. That's fine. But if it's 5, 10, 15 minutes later, that's not early anymore, right? So it's hard to get it on the spot. Like, okay, I took the entry on the split second and it worked. But within the first 1 to 2 minutes, you should have it starting to move your direction, right? So the only time that I take a full hit is that moment you described, Carl. Like I bought it and damn man, the bottom just kept going and like, whoa, I wasn't even close. It didn't even pause for 2 minutes. It just flushed right past my entry. Then I'm dead wrong, right? Then my timing is just way off and I gotta eat it. So there's no way to know on those. Once it starts in your direction, then you should be able to move your stop. There I go. The gaps, I can't tell you where to sell in a gap up or where to buy in a gap down. Gaps, I will tell you this, they're the hardest trades to play. They're the most inconsistent, the hardest to manage risk, and usually the worst performing for traders, right? They're home run type trades where you get one right and it feels good and then you think you have it, and then the next 10 times you do it, you get nothing out of it. So gaps, unless it's the right setup, where it's a gap that's just clearing a base, or it's a gap that's just breaking out of a range or something like that, or it's a clear novice gap where you've been trending so long and then you gap way away from the trending move. But earnings gaps especially, like what today we have a lot of, they're hard to play. So there's no rule about this is where you should sell a gap or where you should buy a gap down. They're just hard plays. A novice gap is like a trending move. It's like a climactic move. So something is trending 3 to 5 bars in a row in one direction, and then there's a huge gap away from that trending move, and it separates from the 8 and the 20. Versus a gap that just breaks out of a range can be far away from the 8 and 20, but that's not novice. You want to short those, right? So novice gap, you know what novice gap is? Like the stock is up and up and up, and everyone's talking about it, and then the next day it's been on CNBC a bunch of days, right? And like, oh, look at this thing, and everybody's telling everybody about it. Then it gaps up. Like it's already been running for forever. It's been trending, and now it wants to gap up. It's usually the time it fails. So my advice to you is, don't make that the majority of your trading. I mean, I don't know a single trader whose entire focus is gaps that does well. So it should be like one trade. Like if you want to try one trade with one risk per day on a gap, that's fine. You do one trade, but putting your whole day on the line on a gap play day in and day out, you're asking for problems. Carl's asking about the dynamic stop. Yeah, basically it's a trailing stop from your entry. Correct. So as it's moving in your direction, you're starting to tighten your stop. Correct. The S&P 500. Yeah, I like to trade the spies when they have good setups, when it's trending. It's the same as any other stock. It's just an ETF. You trade it the same way. Today it wasn't at the open, it didn't look great, chopping around there. And then we said here if we get a ribby, and we had one, but the risk reward wasn't as good as the other stocks we found to play instead. So usually I use it as a barometer. I use the S&P as a way to um, a way to gauge what's happening with other stocks or other sectors. Because big cap tech and stuff like that, and market name stocks like Apple's and Microsoft's and things like that, they usually trade with the spies, right, or the financials. And when you see them diverging, it can give you some clues about whether or not that stock is on its own page that day, or whether you think the market move can hold. Because if Microsoft's ripping and the market isn't, then that tells you it's just Microsoft, right? Because it's such a big part. Or Apple's ripping and the market's not, or Apple's selling and the market's going higher. Well, it tells you Apple's super weak, right? Such a big chunk of the market, but it's going down and the market's going up. So I use it as a barometer, even if I'm not going to trade it. Do I make decisions off a level two? Yes, there are times I do. That's way beyond the scope of today, though. I can't answer that question in 5 minutes. But yes, there's a way to read level two at times. You can't do it all day, every day. You can't just sit there and watch level two and make every decision every minute. But there are certain times, like today, I talked about it with was it our JPM trade? Yeah, where we got to that number, right? And I was starting to read the level two. And I saw the order flow coming in strong, and I said, if we chew through this, we should get a nice little spike through the whole number. And we did. So there are times when I think you can read it or at least try to get an edge. It's not a perfect science. There's no exact rules. There are guidelines, and a lot of it is feel, a lot of it's experience. But there are times I think it gives you a very small edge if you know how to read it. But the majority of the time, it's just going to be noise. Yeah, how do you read it? That you're asking me to do like a 1 day lecture in 5 minutes here on how to read a level two. It's not something I can go over right now with any kind of effectiveness. It's a much more in-depth question. That's stuff I go over with our group, but I can't do it today. It's just a super, it's an in-depth topic. If I give you some short little answer, I'm going to do more harm than good. So again, it's a tool that if you know how to read charts and you know how to read patterns, it can help you. But if you don't know how to read charts and patterns, it's worthless. It's not going to help you. It's not a shortcut. It's not a secret. It's an add-on, right? It's refining a skill that you already have. It becomes more valuable. Without chart reading and pattern recognition and risk management, then reading level two is useless. Stock selection, yeah, we have for the traders to look at day in and day out, a set of 50 stocks that are, well versed, well diversified across different markets. And that way you're kind of focusing on the key names. It's all big players and different levels of volatility so that if you want to trade slower stocks or low beta stocks, we have those. You want high beta, we have those. And it fits everybody's kind of, skill level where they should be. If you're trying to just trade the entire market, then you want to focus on, I still think you should have a set list of names that you get comfortable with so you know what they tend to do. If you want to use a scanner and try to find a hot stock of the day or something, I mean, that's fine. The downside of that is you don't really know how the stock behaves. Like I'm not as comfortable trading a name that I've never traded, right? So someone's like, "Oh, look at this," and if I've never seen it or I don't know what it is, it could be the best looking pattern in the world, but I'm not that comfortable with it because I don't know what to expect. I don't know how it behaves. When you trade the same things day in and day out, you start to know what normal movement looks like. You start to know what typical behavior is so that as you're trading it and you're watching it, you're like, yep, that's what this one tends to do. This is how fast it tends to move. This is the range it moves in. And then if you see something abnormal, it gets your attention. If it's the first time you've ever traded something, you have no idea what to expect and it becomes very difficult to stay in the trade, right? You get very uncomfortable. You don't manage it well. So typically, I don't trade stocks I've never heard of with big size or big risk, and typically I won't trade them at all unless they're just, if somebody calls one to look at and it's like, okay, I haven't seen a climactic move look this good in a while. Let's take a shot at it. But if it's just like a regular looking trending type move and I've never traded it, I usually don't. Do I ever trade Baba? Yeah, it's on the list, and it depends. Again, Baba's one of those that if it's having a good day, it's a great one to trade, and if it's not, it's a little too spready sometimes to bother with it. So when it's moving, it moves well. When it's not, it because of the spread, it's tough to trade. Why is stock trading better than option trading? Option trading from a day trading perspective is not easy to do, guys. It's hard to day trade options. It really is. The spreads are big. There's no direct access really, and even when there is, it's tough to get fills. Liquidity is not as good. You run a level two next to a stock, a decent name stock. I mean, it's moving every second of the day. There's liquidity available. Some of these option moves, you go look at it and it stops moving. Right, the spreads widen up, and then your fills are bad. And it's just really hard. I don't know anybody that does well day trading them. People that directional trade them, and they do okay, or they use options for like hedging or selling options for income, things like that. I mean, I've had more success with that. Trying to straight out day trade like I did today and use an option instead of a stock, it's just too hard. And there's no need to do it. The reason people do it sometimes, they don't have liquidity, or I mean, they don't have funding. They don't have enough money to do the stock, so they try to get away with doing it cheaper on the option. If you have access to funding and you have enough buying power, then the stock is definitely easier. If you have a set list of stocks, here's the question. If you have a set list and you're watching those, should you not look at anything else? It depends on how many stocks you can put up per day and how much work you want to do. I mean, you can't learn 500 stocks. There's no way, right? So if you have 10 or 12 to start with, watch those for a few months. Then you want to rotate to the next 10 or 12, watch those for a few months. And all of a sudden you'll be able to watch 20 stocks, right? Then the next 3 months, add another 10 or 12. Before you know it, you'll have a pretty good handle on a bunch of stocks. I mean, I've been doing it over 20 years and I probably have, like 5 to 6 favorite go-to stocks. That's it. Now, it doesn't mean I won't trade outside of that universe, but I constantly look the same stocks every day, right? I'm looking for the go-to stocks that I know, that I love, that move well, have great liquidity, that tend not to rip you too hard. If they get a little crazy, they don't throw you off, buck you off the move too bad. So I'm not looking every day for the newest thing, but it's a lot of, and some of the stocks I used to trade, they don't exist anymore. Like one of my favorite stocks ever in the history of my career was RIM before it became BlackBerry. When it was RIM, Research in Motion, that was one of the best day trading stocks ever for me. SanDisk, you guys remember that company when it was called SanDisk? That was another one. That was a phenomenal stock for me to trade. They don't exist anymore. So things change. But over time, you'll trade different stocks, you'll get a feel for them, and some you'll discard like you won't like them, and others you'll start to like, and you just kind of build your own little comfort zone with what stocks you like. We never did an options prop program. We had an options education program, but we never did an options prop because, again, it's very hard to day trade it, and it's almost impossible to control the risk on it to fund it. That's the problem. Just like I tell you guys, you want to control your risk, right? Well, as a prop firm, that's your number one goal. You have to be able to control the risk of the traders you're backing. Otherwise, you run the risk of them blowing up in their accounts, right? So the idea of an option funded program, it's great, but it's like, but how do you control that risk? It wasn't easy. So we couldn't ever figure out how to create it and how to have the risk management set up to take people out of trades, and it just never worked out. Where stock, it's pretty easy. You have daily loss limit, you hit it, you're done. Liquidate the position with not worrying about too much slippage, right? You have that an option, you might pay who knows how much slippage trying to close a position they took. Right? They take some stupid trade with a dollar spread on it, and nobody's trading it. And now you're trying to get out of it, and then they're like 5 times past what they're supposed to lose for the day, but you got to get them out. So it never worked out to be able to fund an options thing. So we just stuck with it, strictly education. Yeah, selling an option during the day, like I said earlier, if you're trying to create money, you're selling options. I think it's a little easier, but during the day it can be tough. If you're having success with it, by all means do it. I think credit spreads, debit spreads, things like that work out better. If you have the right to sell uncovered, that's even better. And you just give yourself a little time, um, a couple of months out instead of same day. And I think you can have some moderate success with that too. But directional trading at the right moment, right? Like I don't try to day trade the options at the right time. There are certain moments where I'll say, guys, look, this thing is so far out of whack. If you go out a few months and just buy a put and just wait, you'll cash out at some point. Or this thing is so beaten down, just buy a call a few months out and we're going to get a bounce at some point. And we'll, but I'm not trying to do it. Okay, buy the call at 10:30 and sell it at 11. It's too hard, especially if I can just play the stock. Why do I need to deal with it? Trade the open or wait till later. I don't usually trade right the opening bell. Trade the open would be more the first 2 to 5 minutes kind of thing. And again, I think you should only put one trade on, and it should be one small part of your daily risk. And if you hit it, great. And if you miss it, okay, now you wait for another setup. Right? Like today, I tried twice on Facebook within the first 5 or 10 minutes, right, and it didn't work. Okay. Tried them, didn't work. Just let's relax. We did Microsoft within the first 10 minutes as well. That one did work. And then the next trades didn't come until, what were they? Apple and, hold on. Let's go back and look at these real quick. So we tried Facebook. No, we tried Facebook early on some shorts, and it was just too whippy and kept getting whipped out of it. Right. And then the move happened, but we got knocked out of it. Okay. Nothing we can do. Then we looked at Microsoft, played that one early, right? And that was off the 200, so that was within the first 10 minutes, and that one worked out great. And then that died out, right? But it was a quick hitter. Got all our money in one shot. And that's the other thing, is don't worry about how long it takes to get paid. If you make 4 to 1 on your money in 5 minutes, who cares? Why does it have to be 30 minutes? Why do you have to hold a trade for an hour? I just want to make the money. I don't care how long it takes. Right? Then we did Apple. We waited all the way until, how was this? Right? We waited all the way to here to get an Apple trade. So that was well past the open, because that's all it took to get the support. We tried it in the first 10 minutes. We looked for the move to the 200, but it didn't happen. So we had to wait for it to get there. And it finally got there 25, 30 minutes later. And then we tried some trades on eBay. I didn't do the one early. A couple of people asked about the short early right in here, and it worked out okay. And then we tried some bounces at the whole numbers in this area, right? So that's a good 30 minutes plus before, and couldn't get anything to work out. It's kind of chopped around and no real bounce. So yeah, sometimes we did entries early, and they worked. And then after the first 5 or 10 minutes, we had to be patient and we had to wait for the right setups to come about. Okay. So I don't think you should be shooting your whole risk in the first 5 minutes. We're like, okay, I'm either going to hit it or I'm shut down for the day, or I'm going to make or break myself at the open. I don't think that's a good idea at all. And I don't encourage that one bit. I think taking one trade, like one good shot, if you see a solid 2 or 5 minute pattern, right? Like I said earlier, like the give back trade, like those are solid looks on the first 2 to 5 minutes that can produce really big money, right? Like if we go back to this eBay thing, no, it wasn't eBay. What's the one that ripped at the open on the 2 minute? And I said this would have been a good one. Oh, shoot, let me see if I can find it. What was it, you guys? JP? Cisco duck. Yes. See, if you get a trade like this, check this out. Right. So here's one that followed through beautifully, and they don't all follow through, guys. Sometimes you do the trade and it doesn't work, but whatever. Here's a trade where at the 2 minute open, the bar wasn't so big that you couldn't just play the high low game. Right. You go back and look at this 2 minute bar right here. Okay. That's a nice bar. That's not too big, right? It's maybe 25 cents. Let's see what the high low was on that thing. Yeah, call it would slip, call it about 25 cents, right? So it's not like $3 or something crazy where you have to think, what's my potential profit, right? This is the question I always tell you to ask. Where's my double, right? Meaning how, if I can't get twice my risk, why am I doing this trade? I don't want to do the trade just to make 1-to-1. I want to make double or more. And I don't want to have to do a lot of work to get there. So for this trade, where's my double? Well, hell, it's only 25 cents. So this goes pretty wide open. Should be able to get 50. So I think that's a good 2-minute trade. If the bar was way up here somewhere, I would say you got to wait for the give back on the next bar or the red bar ignored, right? You don't want to trade $1.50 on Cisco. You're probably not getting $3 of follow through. Okay. So on the 5-minute, and here I'll show you what I mean. We can use the 5 because the 2-minute triggered and just went. It was perfect, right? You bought the high, stop under the low, and you got this huge run. Okay. Now, if you're doing the 5-minute, I'll blow this up here. We'll shift to the 5-minute. All right. Now, here's the issue with the 5-minute being, see how this bar finished, right? That's substantially bigger. So now if you look at the 5-minute trade on Cisco and you look at the high to low, you're getting to the point where you got to ask yourself, can I get that much follow through? Right? Because now you're getting up toward like 65, 75 cents. Can I get $1.50 just for a double? The better trade is going to be, can I get a ribby? Right? Can I get a small bar right here or a little pullback right here and then take off? So instead of having to play the buy here and the stop here, right? Because what that creates is a risk amount of this. Now to get a double, you have to go here and then where? Like off the chart to get twice that. You understand what I'm saying? This is one amount of risk, high to low. To double that, that's one. That's, you can't even see it right now. All right. Versus if I have a small bar right here, and then the next bar takes off and breaks that high, like so. Now my risk is this. How many of those can I get to that same area? You understand? Like now if I do it, if that's my risk, that little bar is my risk amount. And I were to go all the way to here, which is where we had to go to make this double, right? If this is 1 and then 2's off, let's just say 2's the top of the chart. It's actually past that, but let's say the top of it. So now if I can do this, and that's my risk, well, how many of these fit to the top of the chart? Like 5, right? It's like a 5-to-1, 6-to-1 move. So it's when the bars are so big at the open, you're better off looking for the smaller play, and you may not get it. Okay, so the idea is get that red bar ignored. The give back just simply means the next bar starts to form this, but it doesn't close, and it just turns and breaks the high. And you've got to act on it then because it's probably going to run away from you. Okay, so here's the 5-minute with a give back play. Right? Look at, you can see it's kind of a hidden red bar ignored, right? So as this is forming, you're buying this high and a stop on this low. Now it's not red because the pullback happened in the current 5-minute bar, right? It already started to give itself back, opens, and then takes off. The opposite would be this closes right at the high, and then you'd see this wick form on the next bar. Starts to pull back some and either closes red, then breaks out, or puts in a wick and then takes off. And you create that risk profile with a buy here and a stop here. And now if you get followed through in this area, look how much you get paid versus what you risk. Okay. So that's the give back bar. Or it's tied to the red bar ignored approach. But at the open, those are really strong plays to look for because a lot of times you get that strong 5-minute momentum and it's like, wow, I wish I had known I would have played right at the bell, but there's no way to know that. So if they're so big that when you double the size of that bar, and that's all you have to do. Well, how do I know if it's too big? Look at the range about 30 seconds before it's going to close, see how much that is, and then say, okay, what's double that? Look at the chart. Do you realistically think you can hit double that amount? Yes or no? That's all you got to do. And if it looks out of reach, then you don't play it. Now, how much follow through, and this is what I want to show you. Look how much follow through this one did have. Okay. And if you look at the size of the bar, let me go back to Cisco real quick here. Okay, so that opening 5-minute bar had a low 45.75, 77 to 28. So we're going to call it, with slippage, we're going to call it 60 cents. So we need to go $1.20 above 46.25. So we need to go to 47.45. You understand? To get a double. Well, the high of this bar was 47.09. So even though this looks like a ton of follow through, if you played the opening bar with a buy here and a stop here, and you had all this follow through, you did not double your money. Versus if you played the stop here and played the give back bar instead of the first 5, you waited and played after, you made like 5 to 6 times your money. Right? And I know it's deceptive and you have to but measure it yourself. This bar did not produce a 2-to-1 follow through. Even though your account say, oh, there's like 10 bars up, it is not double the risk. Okay, even now, the move has continued. You've been waiting all morning. It's 11:15. Right? Look, it's 11:15. It still has not produced double the risk. So I'm not into like, oh, I was in the trade for 4 hours. I don't care. Dude, I'd rather be in the trade 5 minutes and get my money and get out. So even at this point in the day, you're like, yeah, but I sat through all these bars and all these pivots and all these trails. Good. And you still haven't made twice your money. Right? If you're tying up capital for an hour and a half and you have not doubled up yet, then how efficient is that trade really? Think about it. That's money you cannot put to work somewhere else. It's BP that is tied up and you still haven't made double. And it's almost 11:30. shots, and there's times to stay out, get away. But the next time that stuff happens, remember the first few moves that go up, 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 if you're trying to play those things, they don't last. You cannot go from 40 to 400 in 3 days and think it's going to hold. You just can't. I mean, you can, but then you lose all your money. So yeah, they really stuck it to Wall Street on that one. Take that, Wall Street. There's 700 million in profits. How's that feel? And that's just one. You know how many hedge funds? So they hurt one hedge fund, and I guarantee you there's like a dozen that just made a killing on this thing. And all the other traders, all those little Robinhood Reddit people, they probably didn't make much of anything at all. They probably held it all the way back down. Shame. Shame, shame, shame. It's just about over, right? Where did it start? In the 40s? Can't remember where it started running. Start in the 40s? Yeah, in the 40s. It's in the 60s, guys. It's just about over. Right? It started the run in the 40s. It's down in the 60s. It's don't sell. Don't sell until it comes all the way back. That's too funny. Anyway, everyone goes through it at some point. Right. I told the group the other day, my first experience with a pump and dump 20 something years ago, I had that happen one time. Wasn't quite this extreme, but same thing. It had a penny stock and it ripped. I was like, oh man, this thing's gonna go forever, and it didn't, and it just slowly bled out right back to where I started. Wow, that sucked. So anyway. Anyway, I thought that was entertaining. All right, let me see here, guys. I know I'm not getting everybody's questions here. I'm doing the best I can. I'm trying to answer the ones that are going to help, where it's going to be beneficial to the most people at one time. If a stock has made 3 moves up already, then what's the retracement level for the next move? Yeah, if a stock has made 3 moves already, generally I don't like to buy them after that. I actually start looking for reversals at that point. Um, 3 to 5 pivots is the range. If it depends on the time frame too, right? If you're on a 2-minute chart, then you have a better chance of seeing a fourth or fifth push. If you're on a 5-minute chart, yeah, after 3, it starts to get a little dicey. We have something where after the third one, if the fourth one doesn't make significant move up, you actually start to look for reversal, right? The double top, double bottom type thing. After once 3 pivots have been made, generally those things get a little tired out, and maybe you consolidate a bit. So if you have 3 strong pushes in the morning with pullbacks in between, that should take you into lunchtime anyway. And now you're probably consolidating through lunch, and you can look for an afternoon move. Um, anything beyond that, not really. Even if you have the right retracement, I'm not a fan of fourth and fifth pivot moves up on a 5-minute chart. All right, let me do this here. It's 11:20. Watch and see if QCOM's going to get above this 20 here. I got above the 8. Keep an eye on QCOM here. See if we're going to get this thing to 15-minute charts poised too. If it can get by that, it held that bottom pretty well. If we can get past that, here we got a shot for a move. Program. Let me do a quick review here, and then I can answer some program questions. And then I'll let Uncle Bill, and he can jump on here and talk to you a bit. Okay, so give me 1 second. I got to shift the camera one more time. One moment, please. And time of day too. I know, the other question I get asked a lot by newer traders as well. Why do you only do 30 minutes? Why don't you just trade all day? If you can make this in an hour, why can't you just do this for 6 hours? It doesn't work that way, guys. There are, the way trading works with order flow in the mornings. That opening 90 minutes is pretty good for the retail order flow. At the end of the day, the market on close orders kick in. You get a lot of institutional activity. Middle of the day, it's not that great most of the time. So you're not going to get the same type of volatility all day long. You don't get the same types of moves all day long. Therefore, you can't do the same thing you did from 9:30 to 11. You can't do it all day long. If you could, then yeah, we'd sit here and do it, but that's not how it works. So there are moments in the day when it's not, it's just not efficient trading. So we try to focus on the key times, which in the morning, usually that 9:30 to 11 is the key time. QCOM's doing pretty good, guys. We're going to get a late day push here. Getting through that 8, trying to get through that 20. 15 minutes working. QCOM's got a chance to do it. All right, while that's going on, that'll definitely be the last one here. Let's quickly go over this. Okay, the programs that are available to you for funded trading, I know sometimes there's some confusion because there's different levels of it. And the one key thing to make sure you understand is that no matter which program you're in, the training part of it, when you're learning how to trade and we're tracking your results and all that, the training part of that is the same for everyone. Okay, you're all trying to reach the same goal of efficiency and proficiency to graduate to a live funded account. Now, the benefits and the extra things that come into the different levels of the program are education, how much of it, how often do you get it, and then payout rates, which is to me the biggest one, right? Well, I mean, they're both important. So the amount of education you think you want and the payout that you're shooting for after graduation, that's the main difference between all the programs. Okay, so if you're looking at it and you're considering, well, which one should I do? For example, if you look at a self-start program versus a pro trader program versus a master program, right? There's different levels of buying power in the end. So you get bigger payouts, higher levels, right? So for example, I'll take you to the high end of master. You see it's 80% payout, okay? And you can go over $1 million account. If you go to a self-start, you can see that's a 40% payout and it caps you at 500,000. But if you look here at the training phase of self-start, you start with 50 grand, you got to make 3,000. If you go to the master, start with 50,000, you got to make 3. And if you go in the middle to the pro, start at 50,000, you got to make 3. All right. So the training levels for all these are the same. So it's not an advantage to say, well, if I do this one, my training level is different. Right? That only happens once you're in the program. There's one you can upgrade to after you're already a member. But to start out, there's no higher levels. Okay, so the training is the same. You have to accumulate $3,000 of net P&L, not gross P&L, net P&L. Nothing gets paid on gross. Right? You get your paycheck, you don't get to keep the gross. It's what you net. The 90-day thing, let me make sure you understand that, guys. See, it says minimum time, not maximum time. If it was maximum time, that would mean after 90 days, you're cut from the program if you didn't make it. Right? Minimum time means we're not even going to look at your account until 90 days has passed. That is the fastest time possible that you could graduate. Okay, the fastest. So we're not even looking for anybody's account before the 90-day period. So if it takes longer than 90 days, so what? It doesn't matter. Okay, it could take you a year, 2, 3, 5, 10, your lifetime. Like the point is there's no end to the program for you. All right, that should be a comforting factor. Like, man, if I don't get it right in 3 months, I'm out. No, but we're not going to review someone's account in 30 days. So don't think you're going to come in here and say, oh, look at me. I did this in a week. I should graduate. If you happen to hit some crazy trade that made $3,000 in a month, good for you, but that doesn't mean you know how to trade. It means you had one crazy trade. We're not willing to back somebody that hasn't proven themselves for at least 3 months of trading. Okay, so that's what the minimum time is. I'll make sure you understand that. Okay, not a maximum, right? Maximum would mean you're out after that short of a time frame. Okay, all right. So given that program level, you would decide, well, what is it that I want out of my program? All right, so the easiest way for me to show you this quickly is, and you can read all this stuff on the website, but let me just try to get it in a summary format for you so you can see it a little easier. Um, you basically have to consider these main things, okay? Payout rates, to me, is a big one. Where your account maxes out if you move through the advancement tables, like what's your upside potential, where's your ceiling, all right? The type of education you get, and then study session chat room access, all right? So obviously you can see right up here, this is the one that jumps off the page at you. It's different levels of payout percentage, okay? The account size can be substantial on the back end too, all right? Now, these two, Pro and Master, give you live education, right? Live course education. The self-start is an on-demand education. It's the same education. Nobody's getting like different material or different manuals to look for. It's just whether it's purely on demand and you are self-studying, hence the name self-start, or is it a live environment? Okay, where you can go and ask questions interactively during the seminars. The other thing that adds to education are the study sessions. Okay, and the amount of study sessions you get varies with which program you're in as well. So if you're in a program that has access to all the study sessions, then you get a lot of sessions with Oliver. If it has limited access, you might only get one extra one a month. Okay. So, for example, if you're in the pro trader study session, you get to go to this one plus the self start plus the kickstart. Right? If you were in a self start, you would only go to your self start and your kickstart. You wouldn't go to the pro. If you were in kickstart, you wouldn't go to anything but this. Right? It's very limited. So if you're in a master program, you go to everything all the time from study sessions. Right? And then the chat room access, it's one chat room, so everyone's in the same chat room. So it's not like, well, if I'm in this program, I only get to go to the beginner chat room, and if I'm in that program, I go to another chat room. The trading chat room is open every day for all program levels. Okay, it's on all program levels. What else do I have to cover on this? I think that's the main differences. I just want to make sure if you guys are on the website and you're looking around, I know sometimes it can be a little daunting. So biggest difference again is payout rates, okay? And you don't get to change these after you graduate, right? So the payout rates, how much you move up in the account size, the type and amount of education you want, including study sessions, right? But the time to graduate, because this question always comes up, well, what's the difference in the training? It's no different, guys. The training level, everyone gets the same account, the same buying power, the same daily loss limits, right? Like this is the same. Now the table's been updated. I got to update this table. So give me a second here. We did have one change recently, and it's been a good change. So let me show you. Hold on one moment. This is getting recorded. Let me update that level real quick. Because we took away, when we got to the new platform, we took away the weekly stop. because it was causing some issues with traders pressing way too hard. So we changed it and made the daily stop a little less. So we're going to put this, there we go. So, and it's the same as whether it's master or pro, it doesn't matter. So the training is the same, but the daily loss limit is 200 and there's no more weekly, right? You see what it used to be, show you. We used to do a daily loss with a little higher, but we gave you a weekly cutoff. So if you hit the daily loss on Monday and again on Tuesday, you couldn't trade the rest of the week. We thought that would be a deterrent for people hitting the daily, and we found out it wasn't. It actually, they would get more aggressive. If the first day on Monday went bad, they got more aggressive on Tuesday trying to get it back. And then they would hit it, and it was like, oh, well, now I'm done for the week. So we lowered the daily loss, but we took away the weekly. So now you are going to trade 5 days a week. You are going to trade Monday through Friday. Okay, which is a good thing. All right. Hold on one second, as I'm getting an update about these study sessions. Give me one. Hold on, guys. I think, all right, somebody said, let me go back and see that. Did I have a typo on this? Hold on. Study sessions. Yeah, okay. This is, guys, this is my bad. This is 3. I was counting the number of levels. There's pro, self, and master, and I'm sorry, there's kickstart, self-start, pro start study sessions, right? That's what I showed you on the thing here. See this? Pro, self, kick, and then it repeats. And the master traders go to all of those. So it's still 3 because they get to go to all of them, right? So that's a typo. It should say 3 here, right? And I cannot seem to clip this. This is an image, not a cell. So anyway, guys, this is 3. Let me do this here. There we go. And I don't know how fast I can fix this. I could try it. There we go. 3. As doing it on the fly right there. Yeah, I just got a text when I'm saying I had a typo. So anyway, it's 3, not 4. All right, but the big change here, in case you're looking at advancement tables and stuff, the big change is um, the daily loss limit being 200. And some of you might have been here last year, and you'll notice this change. And there's no more weekly loss. Okay, to me that's pretty significant. Because you guaranteed to trade 5 days a week. All right. If you're in a program, here's a question: if you're in a program, can you upgrade during your training? You can. You can't upgrade after you graduate. You can do it during your training, however. That is true. Okay. All right. During the open house events, guys, we typically have promotions. We have specials for the day or two that we're doing the promotion. Um, we just got done with our big year-end stuff, so they're not, that's come and gone. That won't be back till next year at the holiday time. But for the open house, for this next 2 days and this weekend, here's the main programs. Okay, we have a self-start, pro start, master, trade for wealth. There's also a live training camp you can talk to admissions about. I'm not as familiar with that one as they are, but there's like a in-between one right here. These are the regular prices of the programs. And depending on what promotion you're around, they do change. We do have specials from time to time. For this particular open house event right now, this is the current promotion through Friday. So it's a 48-hour deal. All right. So through February 5th, today's the 4th, tomorrow's the 5th. This will be the discount for the programs. All right. Master especially, pretty decent discount here. So this is self-start, the pro, the master. TFW is Trade for Wealth. I know it's not a funded program, but it is an educational program that's pretty popular. That's more the long-term buy and hold, and you're trading your own funds. Okay, that's why it's called Trade for Wealth. So that's Oliver guides you through that program with plays and positions for the long haul, but it's not funded. We're not giving you money to invest in your IRAs or your 401ks, right? This is your own money, and you just want to follow along with how he's playing stuff. All right, that's TFW, Trade for Wealth. Okay, so there's 48 hour sales, pretty good discounts. After Friday, there'll be a little bit more of a continuation, but it's not as good, and this will go through the weekend. All right. So after Friday, the weekend will still have a little bit of an incentive to start before next week, but you lose a little bit of the promotional discounts. All right, that should see $59.99, not $500.99. Okay, so obviously there's a concept in trading called hit the bid. The faster you act, the better fills you get. Okay, so that's why the pricing is better in the next day or two than it is through the weekend. Right? If you know it, if you've seen this before, or you've seen it the first time, you know that's what you want to do, and you hit the bid and you move on. Right? And you do what you got to do. You get in, you get trained, you get educated, you start trading. I did not mean to do that. Hold on one sec, guys. I did not mean to cut the camera off. 1 second, please. I'll put it right back up. Hit the wrong button. There you go. Okay, so those are the prices for the special, for the open house event, good through Friday and then good through the weekend. It's usually busy when we do these. People try to call, they have trouble getting through. You can leave a message. If you email, I will tell you this, guys, we're going to funnel this all into one place to make it even easier to track things. So you can call that number, or you can just email info@iFundTraders. It will, when you email, even if you call, same thing, it will timestamp your inquiry. All right. If we don't get back to you right away, because a lot of times we get bombarded with stuff, and then it's, we got to get back to people in the order it came in. So if you responded today or tomorrow and we don't get back to you until Saturday, you don't lose your pricing for the Thursday, Friday, right? You did respond. Okay. So if you're interested and you want to be contacted or you want to register or whatever it is, make sure that you're doing this in a timely manner so that it's time stamped. If you wait till Sunday and say, "Oh, I wanted to do this thing on Thursday," well, it's Sunday now, right? It's like saying, "I wanted to buy Apple this morning at 9:40, and now it's 11 o'clock and it's way higher." Well, you should have bought it at 9:40. The trade's already come and gone, and you missed it. Right? It's no different. Okay. So best thing to do is if you have more questions, specific questions about it, I try to give you the overview. I try to give you the highlights. If you have overview questions, you can use this same email, and it will be good for any kind of questions. From there, we can send it to the right people to get you the right responses. All right, let me scroll back through here and see if I can find. Just again, I can't get to every single question. I apologize. I wish I could. All right. I got most of them. I know you guys are asking. Some of you are asking specific questions. Some are asking questions that aren't really relevant. I can't get to all these. Master program, yes, master program has some other perks with education as far as beyond study sessions. That's why I changed it to 3. Um, if you're joining master now, you do get extra mentor sessions with Oliver as well. So there's a lot of perks to that one. I mean, it's the highest price program for a reason. It has a lot of benefits to it. So yeah, and the details, guys, you can go right on the website and there's plenty of detailed stuff. I just don't want to sit here and read you the website. You can do that on your own. I just try to give you the summary version of stuff so that, um, where the confusion lies. Like the majority of questions that we get in regards to these things, and that's what I try to address here while I have your undivided attention, that, okay, this is what typically comes up as far as the confusion and what you don't understand and what you do understand. All right. But I think that's going to be it for now. I'm going to take a little break before 12. I'm going to let Bill have a chance to hop on here and talk with you guys a little bit. Results for the day were pretty good. Here's your contact number. Of course, I'll leave that up there. Um, our final results for the day were pretty solid. I'll get a quick screenshot of this for you here. And again, what I want you to take away from this is that not every trade works. You're not going to get every trade right, and I did not get them all right. But I recognize quickly when I'm not getting them right, and I get out of the way. Right, I try to get out of harm's way. So we traded Facebook, JP, Microsoft, eBay, Apple, and then QCOM there at the end. So Facebook didn't work, and I lost money. But I kept 2 losses, right, and I kept it small. eBay, I tried twice, it didn't work, and I lost money, but I kept it in check. JPM worked great, Microsoft worked great, Apple worked great, QCOM. So when they worked, right, we wrote them out, we made money. When they didn't work, we didn't let these things get to $300 and $400 and $500 losses. So that when you post your nice gains, it doesn't take a lot to undo your losses. But if I let these losses keep going against me and I have $800 losses or $700 gains, then it doesn't do any good. I end up going nowhere. Right? So that's the key, right? They don't always work. There's no method you can do. There's no skill level you're going to get to where all your trades are going to work. It's impossible. Can't do it. So the only thing you can get really, really good at is controlling the losses. Get really good that when I lose, it's tight. I don't let trades go against me. I never add to losing trades. I never average down. I never try to fix a trade. Like I've been there, done that, blown up a bunch of accounts trying to do that. It doesn't work. Okay. You have to learn how to cut stuff off, control your stuff. I go over it every single day. I mean, to the point where traders get sick of hearing about it, but you know what? They start doing it and it starts fixing the problems. It may take a little while, right? Sometimes it's deep-seated stuff. We got to beat it in there, but this is the stuff that I do. Okay. All right. So there's your contact number. I guess Bill, I'll leave that up until you come on. Then you can just kill my camera. So I'll leave it up there for the next few minutes. I'm going to sign off for now. I think Bill's going to hop on here and chat with you guys in a bit. I don't know how long of a break he wants to have. Maybe see if I can get an answer from him real quick. How long do you want, Bill? You ready now to jump on, or hold on one second, guys? We'll see, because we don't know exactly how these are going to go in the morning, so we don't have an exact schedule. 5 minutes. All right, guys, take 5 minutes, and we'll keep the recordings going. Obviously, we don't want to have 2 recordings, and then if people are watching these, they can kind of time it out. Bill's pretty on time with it, so 5 minutes. We should be back around 11:50. All right. You got questions? If you have anything specific for me, you can send it to me, Dan at iFund Traders. If it's general program stuff, just send it to the info box. And hopefully I see some of you in the program. And if not, hopefully you learned something and maybe come back to another one. Maybe you're not ready yet, but hopefully I gave you something of value for spending time with me. I always appreciate it. Try to do my best to help others on this journey. I know it's not easy. It took me a long time to get here, 20 plus years, and it's not easy, guys. It can be done, but it's a lot of work. Okay. All right. I enjoyed it. Have a ball, and I will see you guys next time. Thank you and take care.